Welcome back to the Coverage Counsel, your trusted guide for breaking down insurance in a world where prices are rising, risks are changing, and companies are tightening their rules. If you're a homeowner in the United States, you've probably noticed that home insurance in 2025 feels very different. Premiums are up, carriers are pulling out of states, and the coverage you think you have may not actually protect you the way you expect. Today, we're diving into what's really happening with homeowners insurance in 2025. And why understanding replacement cost versus market value could be the difference between rebuilding your home or being financially stuck after a disaster. State of homeowners insurance in the U.S. 0:45 to 2 o'clock. Across the country, homeowners are feeling the pressure. In 2025, insurance premiums continue to rise in almost every state. Some states, like California, Florida, Texas, Colorado, and Louisiana, are seeing double-digit increases year after year. Why is this happening? Insurers are facing record-breaking natural disasters, climate-related risks, skyrocketing reconstruction costs, and tighter regulations. Many companies can't keep up with the rising cost of claims, so they raise premiums, reduce coverage, or stop writing policies altogether. For millions of U.S. homeowners, this means higher bills, fewer choices, and policies that may cover less than before. Why coverage matters more in 2025 to 2 o'clock to 3:15. Because of these changes, understanding your policy is now more important than ever. A lot of people assume, I have insurance, I'm covered, but in 2025 that's not always true. Many homeowners only discover after a fire, storm, or major loss that they were underinsured, sometimes by hundreds of thousands of dollars. The biggest cause of this problem? Confusing market value with replacement cost. These two numbers are completely different, and misunderstanding them is one of the most expensive mistakes Americans make. Replacement cost versus market value 3:15 to 6 o'clock. Market value explained. Market value is the price your home would sell for on the open market. It depends on things like location, neighborhood, school districts, land value, demand, interest rates, and the U.S. housing market. Market value includes the land, and land does not burn down. Insurance never replaces it. So if your home is worth $500,000, that number does not tell you how much it would cost to rebuild the actual structure. Replacement cost explained. Replacement cost is what it would truly cost to rebuild your home from the ground up with similar materials and quality. This number is based on construction costs, not real estate prices. And in 2025, construction costs are higher than ever due to inflation, labor shortages, supply chain issues, and stricter building codes. It's common for a $400,000 home to require $550,000 or more to rebuild. That gap is where homeowners get into serious trouble. The danger of underinsuring your home, 6 o'clock to 7:30. If your policy is based on market value instead of replacement cost, you may only have enough insurance to rebuild half your home. Most U.S. insurers follow something called the 80% rule. If your home is insured for less than 80% of its replacement cost, the company can reduce your payout, even for partial losses. That means if you're underinsured, you lose money in every single claim. This is why thousands of Americans learned after fires, hurricanes, tornadoes, and winter storms that they didn't have enough coverage to rebuild. Many thought they were fully covered, but their policy limits didn't match real rebuilding costs. And in 2025, construction costs have risen much faster than most policies. What you should do in 2025 to 7:30 to 9 o'clock. Here's what smart homeowners across the U.S. are doing in 2025. 1. Review your replacement cost now. Make sure your coverage, your dwelling limit, reflects today's construction prices. 2. Add inflation guard coverage. This automatically increases your limits each year as costs rise. 3. Consider extended or guaranteed replacement cost. These add 10%, 25%, or even 50% more coverage if rebuilding costs exceed your limit. 4. Check your ordinance or law coverage. New building codes can add thousands to a rebuild. Without this coverage, those costs are on you. 5. Update your policy after renovations. If you upgraded your home, added a room, or improved materials, your replacement cost needs to reflect those changes. Protecting your home isn't just about having insurance. It is about having the right insurance. Closing to 9 o'clock to 10 o'clock homeowners insurance in 2025 is more complicated. more expensive, and more important than ever before. Understanding the difference between replacement cost and market value could save you tens of thousands of dollars, or even save your entire financial future after a disaster. Don't wait until something goes wrong. Review your policy now, ask questions, and make sure you're truly protected. If you found this video helpful, hit like, drop a comment, and subscribe to the Coverage Counsel. This channel is here to help you as homeowners stay informed, stay protected, and avoid costly insurance mistakes. Subscribe now and protect your home, your money, and your peace of mind.